There is a lot of optimism in the market with regards to June rate cuts by Bank of Canada, and I can tell you that optimism is coming from Bay Street. Okay, articles like these ones, they can clearly tell you that there is a narrative being pushed out by the mainstream media, and that narrative is actually coming from the Bay Street guys, like big bankers, hedge fund owners, the big money players who actually move the market. And the narrative is the Canadian economy desperately needs rate cuts. It cannot sustain the higher rate level. That's the narrative is being pushed out. And what I can tell you is, guys, let's be clear. The big banks in Canada, they run the show. They run the show when it comes to finance. Okay, it's not your finance minister, it's not your prime minister, it's the big banks. Okay, same as the case in the US. The Federal Reserve doesn't run the show. It's the big banks like JP Morgan, Bank of America, Wells Fargo. They run the show, right? If you look at the Wikipedia page of Federal Reserve, you can clearly see who owns Federal Reserve. It's not the army, it's not the US government, it's the big banks. Okay, so the big banks want a lower rate. Okay, so if you look at this chart, it is comparing the big six banks stock performance compared to the S&P TSX index, and you can clearly see that the banks have been underperforming against TSX and S&P index this year. So that's the reason why they need rate cuts, because they have to make money off it. Okay. And the other thing is OSFI, who is the Office of Superintendent of Financial Institutions, which is the regulatory body in Canada. And their main purpose is to regulate Canadian banking system. Okay, they are the regulator of the banking system in Canada. They put out this statement last week, Mr. Peter Routledge, who's the chairman of OSFI, that we have 76% of the outstanding mortgages coming up for renewal between now and 2026. And if the rates are going to stay at this elevated level, those mortgages are going to put payment shock on those Canadian households, which means that the households, it will affect their discretionary spending, right? So if they have to put aside $1,000 or $1,500 towards their mortgage payment, that means that sum of money is not available to spend on something else, like traveling, restaurant, other spending stuff. So it's going to have an impact on the overall economic growth. Yes, he's right. He's absolutely right. But why is he telling this now? Like, was he sleeping? Was he smoking marijuana, since 2021? Like, in 2021, the market went bananas. People were literally taking equity out of their existing property, which means taking new debt to buy rental properties, right? This, in a normal scenario, this should not be allowed. Like, you're taking new debt to put down as a down payment towards your rental property, especially in an environment where there's an existing housing crisis. Property market has been, going through the moon. People were crazy, outbidding themselves, buying property like crazy. In that environment, OSFI should come out and put their foot down and say, guys, we will not allow it. This should not be allowed. In fact, OSFI didn't do anything. They kept quiet. So, this is crazy, right? This is really, really crazy. And now they are coming out of the woodwork suddenly and worrying about the mortgage payment shock in the next 2 years. So there you go, guys. The Bay Street guys putting pressure on the media and the Bank of Canada to start cutting rates. I think it may happen. I don't personally think that this should happen, in my opinion, because in the long run, it's going to damage further Canadian economy. The Canadian economy needs to be, somebody needs to put this back on the track. Okay, the debt level is exploding. I made another video last week, actually yesterday, about debt to GDP ratio and how amongst all major economies, this is a major problem, right? And this needs to be fixed. Otherwise, we are just kicking the can down the road, which means our future generations are going to pay this debt that we are taking on right now. So it's not healthy for the long term. Okay, somebody needs to take steps to kind of fix these things. But you know, I'm just a guy on the internet, right? I'm just sharing with you what's happening, what I see through the noise. But you know, rate it is possible that we will see a rate cut by Bank of Canada. But I don't think this is going to help average Canadian. It's going to help the Bay Street guys. Um, yeah, that's what I wanted to say. So let me know what you think about that. What do you think it's going to happen, and who you think is going to fix this issue? I don't think any politician can do that. This is a major problem, and as I said, the banks run the show. The banks run the show. It's not your prime minister. It's not your finance minister. It's the big banks. Anyway, let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up and subscribe. And don't forget to check the links in the description. There are some free credits available for some product that you want to test it out. See you in my next video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. Sorry for the interruption, guys. Just wanted to let you know that we have a team of realtors which is covering the entire GTA as well as some outside areas as well, like Brent region where I am based off, and I help out the clients in this region as well. So if you have any needs with regards to real estate transactions, buying, selling, investing, renting, let me know. There is a link down there where you can book a one-to-one consulting call with me, and we will be more than happy to help you out.